Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, October 20th. It's 6:26 as I'm starting the video. And as always, please run your player at 1.25x. I wanted to start off today. Well, let's just look at the futures real quick. I mean, I got equities flat as a pancake. I've got the commodity complex, oil, copper, natural gas, all down off about 1%. Precious metals, gold and silver, up about 0.5%. And then on the macro front today, we've got mortgage applications first up, then oil inventories at 10:30. We've got a ton of Fed speakers today. We got four of them scheduled for noon, and then we've got two in the afternoon. And sandwiched in between all that, we've got a 20-year bond auction at 1 o'clock. So that's something we're going to want to at least keep a half an eye on. And usually just the way I do that is I keep an eye on TLT, and I keep an eye on $TNX. That's our yield. We'll see the reaction if there is one. Shortly after 1 o'clock when the auction goes off. Now remember, last week we had what did we have? We had a really good 5-year and we had a really good 10-year auction last week. And remember that pulled rates in for a couple of days, and then it popped right back up again. Okay, today on the earnings front, before the bell, we've got Verizon, ASML, Canadian Pacific Railroad, Abbott, Biogen, and NASDAQ. Those were 5 that kind of jumped out at me on the list. And then tonight we've got the big one. We've got Tesla, Lam Research, Las Vegas Sands. That's going to be kind of interesting to look at as far as Macau based. Remember, Las Vegas Sands sold all their Vegas properties. So now they're more of an Asian gaming company. Even though they retained that name, most of their properties are in Singapore and Macau. So that'll be interesting to watch. See if tourism and gaming is picking up over there. And then IBM, CSX Railroad. Those were the ones that jumped out at me after the bell. So let's dive into it. One of the guys in the trading room posted this tweet yesterday afternoon in the room from Bloomberg Asia. Kind of jumped out at me. Copper traders are paying the biggest premium for immediate delivery in more than 25 years because stockpiles of the industrial metal are dwindling around the globe. Now, I had read another article about that. I might have even posted the those figures in one of the recent blog posts. But just, I think from here on out, we're going to be seeing exclamation points after our basic assumption. And to just put it all in a nutshell, I think anything that's coming out of the ground is going higher. Doesn't matter if it's oil, aluminum, copper, nickel, cobalt, natural gas, uranium, everything, coal, everything. The world is short literally everything at this juncture, and this is just, traders getting panicky is what it is. Industrial companies that need this stuff for their input, they're in the mode of, I don't want to be the guy that runs out, right? Before it was, how come you paid so much? And that is flipped to, I don't want to be the guy that runs out. So you start seeing panicky buying. You start seeing hoarding, just like your own mentality when you go to the grocery store and you see major chunks of the things that you like off the shelf. I mean, this just happened to me this past weekend. I forget what the item was, but I know what it was. It was pre-made diet iced tea. That green tea that comes in a gallon jug. The place that I went hadn't had it for a couple of weeks. And then when I was in there, they had it. And I bought 3. Now, do I need 3? No. But I don't want to be the guy that goes back next week and then they're out for 3 weeks. So that mentality rolls through that you get it when you can get it. And if it's something that you use all the time, you get more so you don't run out. So now I've got a little inventory of the pre-made diet iced tea that I like. And some other guy that likes it is going to go in there and say, man, they're out of iced tea. And I mean, that's just the way it goes. So, and if you're a corporate purchasing manager and you need aluminum or you need copper or anything like that, you're getting out there and locking up supply and asking questions later. And I think prices are going to go higher, but I also think it's going to be volatile. So I think we got to be ready for that as well, and not just go out there and go bananas and then get caught in a vicious snapback rally. So let's move on to the dollar. I think we're getting into a critical spot here, and the reason that I say that is, you couple a falling dollar with rising rates, that throws you squarely in this scenario 2 that we've had our eye on for I don't even know how long. That's falling dollar is going to juice oil. It's going to juice the commodity complex. It's going to juice cyclicals and industrials and the reopening names, and it's financials as well. And it's going to be a headwind to the bubble stocks, the ARC stocks, stuff like that. And I was surprised yesterday because yields took a pretty healthy jump. I mean, they were up 0.51. That's a pretty big jump. That's a pretty big jump in a day. So I was surprised that ARC, the bubble, they seemed impervious yesterday. I think the ARC complex was up like the whole market, and I was really surprised to see that. But I think those relationships are still going to hold. Now, I want to see it in price, but we pop 1.635 and move into this upper range. There's not a lot stopping it now from going to 1.75 and then, over 1.75, then you've got to turn your attention to 2%. I think there is a resistance layer at 1.91% that rings the bell to me. But, I think that inflation narrative is really picking up. And remember, we got the FOMC in early November. I mean, they haven't even started tapering yet. So they're behind as far as inflation goes. There's a lot of central banks around the world that are already starting to, hike 25 and 50 basis points. But we're not even done. We're not even done buying yet. So they're going to start their taper process in November or December. And then we still got 6-8 months of a wind down of QE before the rate process is going to begin. And we could have some real inflation roaring by that time. So Watch your 10-year yields. I was showing some guys yesterday. We talked about TLT. We talked about the breakdown, the back test, and then the fail. If you didn't get that's fine. That's fine. It's just one trade out of a million trades. But just for your trading handbook, that whole idea of a breakdown, return to the scene of the crime, a back test, right? The scene of the crime was where it broke down, and then a fail is such a common move that you should be aware of it. And that's exactly the reverse of the breakout. Breakout, back test the original breakout, and then go higher. So that's your second bite at the apple when you get that. Like if you were saying down here, I want to be short TLT. When you see that kickback rally right into resistance, you can set your stop just above and then see if it doesn't fail again. But this was a very high probability trade that I think we even talked about. We had all this being resistance right here at 146.50. We had the 200 and the 50 both coming in right at the same level. So we had essentially three layers of resistance there. We had overhead resistance and two moving averages there, and it just fell away from that. VIX down at the bottom. And when you're down at the bottom, where does it need to go? Probably needs to go higher, right? Now that doesn't mean we rocket up and the market falls apart. This isn't. It's the lower third is the bullish regime, but we just got to be aware of where we are on the whole scope of volatility. And what the bulls are hoping is just that they keep volatility pinned down, and that they keep it under 18. So we'll have to watch that. Now, if you're interested in trading vol, I'm by far the world's, I'm not an expert at trading vol, but I always thought that it was easier to buy puts on VXX when it gets up here rather than trying to buy calls here. The reason why is they could keep volatility pinned down for quite a while before they go up, and all that time you're sitting there watching, your time decay. Whereas if you look back at volatility events, they don't last very long. Here was a couple days, a week, couple days back in time. So when you get that big vol spike, you can buy puts on something like VXX not too far out in time so that they're not really expensive, and then hope that vol comes in, right? Like it did in all these other occasions, versus trying to pick a long, with volatility down here on the floor. Now, what I would say, if you got a super big portfolio that you want to carry and not, that you're not actively trading, like a super long book that you want to hold through the end of the year. If you were looking to add some protection, you would certainly want to be doing it down here when it looks like, you buy insurance when you don't need it and when it's the cheapest right here. You can't buy puts up here because they're way too expensive. You want to buy puts when they're the cheapest, and with volatility compressed, that's when you would want to do that on your portfolio, like with SPY or some other kind of instrument. Okay, NYMO, I just wanted to show you really quickly that we're, in the upper range, but not overbought yet. Quickly moving through the charts. Here we are at SPY. You can see that price is respecting these levels. Yesterday's action left a little baby gap in here, but for all intents and purposes, we're up near the top. I think any kind of pullback back to this gap that fills, if you got a pullback into 447, I think you got a pretty good support layer there where you could buy it. And if it comes into 449 or touches the top of the gap, I think those are buying locations as well. And you can see here, just with an exploded view, how nicely price is respecting our different levels. And that's what they're there for. That's what they're supposed to do. Give you a reference spot in your trading to where, okay, we captured another level. I can roll up my stops and my strikes. And then, we go right, stair step right on up. And while we're in that bull mode, don't get complacent. If you're actively trading, or if you, put on a swing trade down here, you've got a lot of embedded gains in your options if you haven't rolled them up yet. So just remember, it's not your money until you cash it out, right? Until you take it to the bank. So whenever you have a lot of embedded gains, what I encourage you to do is, at a certain point, roll up to even money. So if you got 427s way back when, and now you're at 449 and you still got them, you got $20 embedded in that call. Roll it up, buy some more time, and move your strike up to 449, 450. 450 is a nice round number that you can use, and then see if we push to all-time highs. And that way you'll have comfort knowing that you got your money in the bank, and if there's some kind of snap reversal, you're fine. Qs, same deal. Gap up. We've had 2 or 3 nice days in a row, and now we see where we're at. There may be a little bit of a pullback. We've got all the large mega cap names starting to report. We had Netflix last night. I looked this morning, it's trading down about $20. We got Tesla tonight, and then I think we've got all the other big fat man names starting to report next week. So a lot of numbers are going to be coming at us quickly as far as earnings go, and those big names are going to really push the Qs around. Depending on whether they go higher or lower, they'll have a dramatic impact on the Qs. So here you've got your levels. Again, respecting the levels really well. Just continue to use them as as reference points on your trading. And so we've got a layer here at 374, and then we've got overhead resistance starting at 376. So those are your 2 most important levels here, just starting out the morning. IWM continues to frustrate. Why? Because while now this chart doesn't look anything like the SPY or the Qs. Why? Because it's the uptrend is not as clean nor dramatic. So this just tends to, we were up 0.37 yesterday. Continues to thrash around. What I really want to see is get this high taken out, and then the prior high up here towards the top of the box taken out, so that we can move up into the 230s. So with that rising rate environment and falling dollar, that should be in the wheelhouse of IWM. But like I said, price talks and everything else is just conversation. And you can see here that 227 is your overhead resistance level. If it came back to 225, 224 and a half at the top of this gap that held, that would be a nice long. But if it got, into this gap below 224.50, you would have to assume that this gap is going to fill down to basically $2 wide, down to 222.50. Before we wrap up here, if you're new to the channel, thank you so much for stopping by. Really appreciate it. I hope that you stick with me for a few weeks at least to kind of get a flavor for how I approach the market. Build up a little confidence in your head about the levels that I present. I honestly think that's something that I do really, really well, and that can help you immensely in your trading, because if you trust the levels, then you can focus on execution. And that's the one thing I can't do for you is, pull the trigger on what you want and, then managing the trade. So anyhow, hit the subscribe button and the alarm bell. That would be great. And then if you look over in the show notes, there's a place to register for all my content. There you'll find a link there. Drop your email address in, and then you'll get everything that I publish morning, noon, and night right in your email box. That would be awesome. And of course, longtime listeners, please help me out. Pass my link along to somebody that it might benefit and help me grow the channel. I really appreciate that. So Facebook, trying to turn the corner here. Not a lot of activity yesterday. I mean, it was up, but it is respecting the levels. So, stick with it. I tried a long yesterday and it really didn't do anything. So, you know what? I got out. It was just a intraday kind of thing. But you can see this level here right at about 342.50 lines up with all this trading that happened back here where that was resistance. So I think it'll have an easier time if it can take that out. But you can see the overhead resistances are pretty equally distant from one another, and we've got a lot of overhead gaps to fill. Apple. This one too is respecting all the various levels. Right here there was a hesitation. Came up and tagged this 147 area where it closed. Where it closed Monday. And then yesterday we had another fast move up to the next level where it has put in this bull flag right at 148.50. So now that becomes your pivot for today. Above 148.50, you can stay long and look for the next notch higher. If there's a pullback this morning and you see price come in to 147 and it holds, that would be a place to buy. Or if you miss that and price comes back up through 148.50, that's your second opportunity to buy. Either on a pullback to support, right? That's opportunity one. And then opportunity two is a break back above the prior high, which is right here. So opportunity one, opportunity two. And if you miss all that, then you got to go up to the next level. So that's what they're there for. Okay, Tesla. Earnings today after the bell. Had a little, I'm going to say wobble. It just basically consolidating all this bullish action. And if you're trading Tesla and you see a pre-earnings run, run to the bell, you can jump on that. But my feelings on earnings. I highly recommend that you exit before earnings, because you literally have no edge. If you want to gamble, you can make that a separate trade, but I would certainly have my earnings trade different than my whatever my swing trade was, because it's totally different. You got a lot of other things to contend with earnings than you do just playing a trend. But Tesla looks really strong, and to a certain extent yesterday, at least in the days before, flowed into the EV space. NIO, XPEV, some of the other names had really nice runs over the last couple of days. Now, yesterday morning, Tesla popped, and so did NIO and the other EV makers, but then they faded it the rest of the day, so that was kind of disappointing. Microsoft, nice uptrend. I have dropped in an upward channel in brown just for a visual reference for you guys. Dropped in a midpoint right here. You can see we're in the upper half of the range as Microsoft is up in blue sky territory. And of course, once you're in the sky, in the blue sky, you don't want to come back down below, right? So I don't want to see price come back in below 307, and I certainly don't want to see price drop out of the channel at 305. Now remember that 305 was the original breakout, right? So it broke out at 305, then consolidated, and then moved above 307 here. So from that standpoint, the channel is doing a good job as far as defining where you want to see price stay, and that is above the midpoint of the channel and certainly above the bottom of the channel, because you can see here, if price were to come back and then drop out of the channel at 305, then that would be your short, right? Because you broke out of a big trading range under 305. You broke out, and then you came back. Coming back for a back test is fine. Happens all the time. We just talked about that. But then it's got to hold, because if it falls out of the channel back into the big range, should not do that. And then that becomes your short against 305, looking for a move down. So Amazon, just consolidation after this big bold move. I show price didn't quite fill this overhead gap here. Came $1 or $2 shy. Whether you choose to say it's filled or not really doesn't matter. I still think you've got a line of resistance here at 34.60 that price will need to contend with. So whether price comes back in here and finds support at 34.30 or comes back to 34.15 doesn't really make any difference. It's in an uptrend. If you get a pullback and you want to get long, there's a couple of layers for you. Or if it starts to run into earnings, you can either buy that pullback or buy the breakout above 34.60 and then see if Amazon doesn't run into earnings. Google, really nice technical action. Why? Well, it's honoring all the levels that we've laid out. We came up here, made a move up, came back, little back test, came up to this 2840 area, big impulsive candle, spent the rest of the day consolidating right underneath it. Once it broke out from 2840, made a quick move up to 2860 yesterday, and then spent the rest of the day consolidating right there at 2860. So now that becomes your pivot point for today. Anything above, I would be looking for 2890. If it hesitates or pulls back, you've got a nice level right here at 2840 that you can key in on. Netflix had earnings last night. From what I could tell, pre-market, it was trading down here around 622.50. So that makes sense because you had prior support down at this level. So this morning, you're gonna have a gap above, right? And we'll have to see where that lies, whether they rally at pre-market or sell it off some more or just kind of hold it right here at 622.50. There'll be a gap above. And then if you're actively trading, what I would do is mark that first 15 or 30-minute range. There's going to be a lot of price discovery in those opening 15, 20, 30 minutes. What you could do, or what I like to do on something that I'm going to trade like that, is let the first 15 minutes go at least. 30's better if you can wait. And then you've got a trading range where a break above you can buy or a break below you can sell. So for instance, if this thing went from 622.50 down to 617.50, thrashed around in a $5 range, then you could alarm the high and alarm the low, and then that's your entry point once price moves outside of that range. It's more or less a bracket trade, right? That's what we do on second day plays. So anyways, that's some ideas for you on Netflix. And again, that's not to beat a dead horse, and I didn't look at Netflix real close yesterday after the bell. Just kind of what I overheard. They had a really good quarter, blah, blah, blah. And so now the stock's down $20. It could have been up $200, on the reaction. It's the reaction that you're worried about, not was it a good report, because we're traders and you trade price. You don't trade subscriber growth, you trade price. So if everybody thinks they want to sell it, then we sell it. If they want to buy it, then we react to that. So moving ahead, SMH grinds higher. We had the double bottom structure with bullish divergence. We had the move off the second low, gap up. Here was your buy point that we discussed at 60.50. Now the double bottom structure has triggered, and we've got the measured move target up towards, let's call it 72.5, 73. And that comes from on a double bottom, it's the height of the structure. So this was 4.7%. And here I've got basically the same thing, 4.7% higher. And just remember, those technical targets aren't always met 100% of the time, but they do give you a good idea. And you can see on this chart, with price right at gap resistance, here at 268, once it enters the gap, and I'm assuming once it enters the gap, it's going to fill the gap, then you're at 271.50, and there you go. You're basically home in terms of the measured move target. Copper. We talked about that first slide. We are at a double top high. This is world record right here, right? 4.8. That's a world record. It's trading at world record prices in London, over 10,000. Here we are with a couple of touches at 4.8 and backed off a little bit this morning. So you can, if you're trading futures, you can find that level on your chart and alarm it. Now on this charting platform, it's an end of day reading, so I can't look at copper directly on this charting platform. What I do is look at it on Thinkorswim on the futures, where you can watch it bounce around or trade it all day if you want. But my point is, I wouldn't be surprised if there's some consolidation here under this prior high. But if it breaks out, then you're in blue sky, and then things might get crazy. But I've got that Freeport call spread on. I think some of you guys might have it as well, out in November. So I'm hoping this doesn't spend too much time consolidating. Hope it breaks out soon and moves higher. Solar is on the move. We've been talking about that over the last couple of days. So here's the TAN solar ETF. You can see this trading range here from 77.5 to 92.5. Price is right there. And so we've got a $15 trading range. If we break out here, you can get long against 91.50. Put your stop just below, and then you'd be looking for $15 higher, right? And that brings you right up to 107.50. So whether you want to go the ETF approach or drill down into individual names, that's up to you. But solar is on the move. Shoulda, coulda, woulda, got it back here. That would have been a very objective place to get it. Why? Well, you had support, support all along this box. You could have played for a move to the top of the box, and then if you get the breakout, then it's all to the good. But you can't catch them all. Once you find something that's moving, though, you can look for the next opportunity, and that's right here at the top of this trading range. You get a breakout, should get a $15 move. And lastly, KWEB broke double bottom structure, bullish divergence, trend line breakout. I like KWEB. I like the components. Look at BABA, big move yesterday. JD, all those names. PDD, what are some other ones? Baidu. You can look at Chinese internet, is on the rebound, on the move. Or if you prefer an ETF, KWEB will do the job. Okay, let's wrap it up here. This has been Chris Butts with Traders Profit Compass. Have a good day of trading, and I'll talk to you soon. Bye.